let's get a little more on what's going on in the markets at the moment, where we're seeing some potential. James Gerrish joining from Shaw and Partners, and also the author of Market Matters. James, a very good morning to you. What are you making of this rally at the moment?
G'day, Andrew. Good morning to you. Well, it's a pretty aggressive one so far. I mean, we had a 240-point move yesterday in the ASX. We're having another 100 odd points here this morning or thereabout. So it's an aggressive one, and it speaks to how bearish the market was positioned going into this move. So one tweak around central bank policy, one tweak around interest rates, and the market rallies pretty substantially, you'd have to say, Andrew.
Do you remain cautious? Is it sustainable?
Look, I've taken a more, when markets have fallen a fairly long way and the consensus out there is really bearish, I take a more of a contrarian view, not just to be a contrarian for contrarian's sake, but I think there's, interest rates have been the key thing that's been weighing on markets. I know there's a heap of uncertainty around inflation and the like, but interest rates have been the real key. And that we've had a pivot from the RBA. We've had signs out of obviously the US Federal Reserve. We've had weaker economic data over there, and we've started to see bond yields taper off from over in the US, which is a key driver. I said it a couple of times just around how bond yields pushed up on an artificially inflated news piece coming out of the UK. Obviously, something from left field created a pop up or a high in bond yields. And we've subsequently come off that. So I think it's actually a more meaningful change than perhaps many will have you believe in the market. So you don't have a 240-point aggressive move on the upside on the ASX without it having some meaning. That's not characteristic of a short, sharp 1 or 2 day move. I mean, that to me, that's got more sustenance behind it.
All right, well, let's look at those areas where you're looking potentially to find some opportunity, you're willing to buy at the moment. Broadly, as far as commodities are concerned, what are you seeing?
Yeah, so commodities, obviously, there's some swings and roundabouts in terms of what commodities. I think copper looks very good here, so it's trading $3.50 a pound at the moment. I wouldn't be surprised to see copper at $400 a pound going into Christmas. Iron ore is probably a little bit more muted. There's growing supply coming onto the market. We all know the demand outlook is a little bit tepid, but it's the supply that's coming on stream over the next 6 to 12 months that's got me more concerned in terms of iron ore. In terms of lithium has been incredibly well supported, and rightly so. So the lithium stocks have been great investments. Got Pilbara and IGO across our portfolios. In the gold space, I think there's real value emerging amongst the gold stocks. The biggest impediment to gold in the last 12 months or so has been the strength of the US dollar. The US dollar's rolled over, which is aligned with what's played out in the bond market. So that's obviously supportive of gold stocks moving forward. So obviously Newcrest is the big guy here, but we like Barbara down in the more junior space. We've got that in our emerging companies portfolio, Andrew.
Yeah, in fact, we saw the gold price jump again. I think it was up around 2% overnight. Also, silver is actually going gangbusters at the moment as well.
Silver's like your erratic friend of gold. So, I wouldn't bank too much on what silver price is doing, but it's an amplified showing of what the sentiment is towards broader precious metals, and obviously the influence, as I said before, the significant influence the US dollar has on gold, silver, and other precious metals.
Just back to lithium, you said you are holding a couple of stocks there, including Pilbara. Do you feel as though then that still has more to run at this point? I mean, it all comes down to that supply and demand dynamic, and depending on who you talk to, there's always a different view.
There is. I mean, there was a massive bearish thesis put out probably 6 to 8 months ago now, which marked the low in the lithium sector, and some of these stocks have tripled from where they were trading at that time. So obviously that's what makes a market. So different views are what really make a market, and you've got to have some conviction around your own positioning and your own take on what is playing out at a particular point in time. I think the trader in me would caution that lithium stocks have run really hard, and I'm a little bit cautious around how hard they have moved over in the in the last couple of months. Pilbara made new all-time highs yesterday, above $5 a share. That's an incredibly strong move. In the IGO, I should say, has been really strong. But I think the medium-term thematic around this trade still stacks up. So I think the medium-term picture is a good one. And I think obviously there's going to be a lag in lead time between when new production comes on stream. And I think so the demand side is strong, and I don't think the supply response is as strong as it could be at the moment. So we're remaining bullish on that space.
And James, tech, how are you looking at that at the moment? I'm just looking at what's going on in the local market today. Wise Tech up around 4%, Xero up more than 4%, computer share. What are you seeing there at the moment?
Yeah, well, I guess we're seeing the impact of what bond yields have had on a high valuation sector like technology. So, storming, super strong bond yields have been an impediment to these type of stocks. That's turned, so therefore the tech stocks should turn as well. So, we're overweight that space. We've gone to an overweight position into recent market weakness. It was a contrarian call. It probably still is a contrarian call. A lot of these stocks, you look at the last tech stock that we've bought as Megaport, that's dropped from $22 to the low sevens when we've picked it up. It's now above 8. But these are huge moves when some of the businesses, Megaport has had a few issues, but I think they're working through those. A lot of these technology companies, the fundamentals of these businesses have actually improved over the last 12 months. So, market sentiment is a really key driver of stock performance in the short term, and the rhetoric always follows the share price. So when share prices drop, you'll find a rhetoric to curve fit what's played out in terms of the share prices. So when I say about, you've got to look at the underlying companies and what they're doing and make a decision based on where they've, the value that you see now. So I think there's clear value in the tech space for mine in the short term. I wouldn't say that across all tech companies, but I think there's value in pockets of the tech space.